Hi everyone and hello traders. This is Steve Miley, the market chartist for FX Explained, with another one of our regular weekly macro watch updates for the week commencing the 25th of January 2021. US dollar recovery theme continues. US earnings mostly inspire. So let's take a look at the macroeconomic and geopolitical development seen in here over the past week. And Joe Biden's inauguration was really to the fore in here, and it passed without any notable incident, which was particularly significant given the violence we'd had previously in early January, passing without incident, and that was seen certainly as a slight positive for the financial markets in here. On the data on the central bank side, we saw the Bank of Canada and the European central banks both in play last week. They were both slightly dovish than market expectations, so de facto slightly more hawkish, and that less dovish, slightly more hawkish tone in here saw both the currencies rally in here versus the US dollar. So the Canadian dollar and the euro both appreciating for the dollar after their meetings in here in the past week. We also had earnings continue, a big week coming up and a fairly big week last week. And we saw Bank of America, Morgan Stanley and some of the other financials continuing to beat expectations. Certainly positive for the markets in here. And Netflix was particularly upbeat, which saw the whole tech sector, the new media sector in here, IT sector, significantly higher, with the NASDAQ in here leading the US equity averages to new all-time highs, which we'll look at as we go forward. And we did have, though, some slight disappointment from the tech sector as well. Intel and IBM at the very end of the week in here losing ground after posting results on Thursday. So markets dipping on those earnings. And on the macroeconomic data, the market flash PMI for the major global economies in here broadly worse than anticipated. And that, again, weighing on the risk-on theme that we kind of carried through from the middle of the week. Slight setbacks in here at the very end of last week. We do have in here the House of Representatives expected to send articles of impeachment to the Senate on Monday. That was announced in here late last week, and then further developments over the weekend. And the political fallout in both the Netherlands and Italy remains a negative for the EU economy as a whole in here. Certainly this political tensions that we're seeing in here weighing on stability, and that's always negative for any economy. And we continue to have European lockdown measures more aggressive, with travel restrictions being toughened up and various nations, France potentially going into a fuller lockdown in here, the UK announcing those travel restrictions, and those are potentially going to be toughened up as we go through late January into February. So we're going to continue to monitor those as we go forward too. What else we have going on in here? Well, the cases and hospitalisations and deaths continue to rise globally in here from COVID-19, particularly in parts of Europe in here, particularly UK in here looking particularly bad, and throughout the United States. So very, very negative in here, continuing here. Despite lockdown measures that have been put in place, we're still seeing these numbers continue to rise, despite as well the rollouts of vaccines. But the UK vaccine programme is moving ahead at pace. Europe in here is slightly behind what we're seeing in the UK certainly, and equally in the US, but the UK doing a particularly good job at the moment in its vaccination program. Let's take a look at the global financial market developments of the past week in here, ending the 22nd of January. Well, the European equity indices kind of sideways in here, marking time below recent news cycle highs that were posted earlier in January. And here we see the DAX kind of sideways so far from January after early strength. But the US equity indices popped higher through the middle of last week. Slight dip at the end of last week, and led in here by the IT sector, particularly the NASDAQ in here pushing higher, and here driven by those that Netflix data, as I say. And then also we had turning to the FX markets in here, despite some slight dollar weakness, a pop higher for the dollar at the end of the week. And the recovery themes that we've seen for the dollar from the very beginning of this year kind of intact. So that whole US dollar recovery still intact. We see dollar yen trying to hold on to its recovery in here. The New Zealand dollar, despite popping slightly higher towards the end of last week in here, still maintaining this correction to the downside. Excuse me. And here we return to the pound, though. The pound is staying very, very strong against the dollar, against the euro in here. The pound strength is like the outlier in here, certainly performing very well, making yet another new multi-year high in here for the pound versus the dollar in the past week. Turning to the commodity side, oil did make a new high early last week, but there's been more cautious throughout last week, whilst copper remains within this tight consolidation range that we've seen since early January. And gold remains vulnerable, having had a big sell-off in early January, tried to rebound last week and then lost ground again at the very end of last week, continuing to look vulnerable. So let's take a look at the week ahead, the week commencing the 25th of January. Well, political events will be closely monitored in the US, with Trump's second impeachment trial likely now to begin on the 8th of February, agreed in here for the Senate from the 8th of February. But we're going to look for any kind of potential developments in here over the next week. And we're looking for further executive orders to come from President Joe Biden. He's put a lot in place over the past week in here, re-signing up to the World Health Organization and the Paris Climate Agreement in here. And we're going to be watching for further coming out from the White House from Biden with further executive orders. And as ever in here, monitoring for new lockdown announcements, particularly coming out of Europe, potentially from Biden in the US, and monitoring those COVID-19 cases, hospitalisations and deaths remain very much in the spotlight. And also watching out for the vaccine rollouts. Are we going to see a better vaccine rollout in Europe and in the US? Will the UK stay on track? On the central bank side going into this week, we had the Bank of Japan meeting minutes on Tuesday, and then we get the FOMC rate decision on Wednesday. That's going to be the main central bank focus for this week. And on the earnings side, we have the plethora of earnings, a really big earnings week in here. Microsoft, big name. Johnson & Johnson, Texas Instruments, Verizon. We have Apple, Tesla and Facebook all coming through this week, and then towards the end of the week, Boeing and Chevron as well. So a busy week on the US earnings side with some really big names in there. Facebook, Apple, Tesla and Microsoft are real standouts. And on the macroeconomic side, we have German IFO Business Climate Monday. We had that Bank of Japan meeting minutes Tuesday alongside the UK employment report. Australian CPI and US durable goods on Wednesday, but the standout being that FOMC meeting and rate decision. German CPI and US GDP both on Thursday, plus those weekly US jobless claims numbers. And then we get Japanese CPI and employment reports finish off the week on Friday alongside the German employment report, Canadian GDP, and then finishing off the week with US personal consumption expenditure, income and spending. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you very soon with another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.